And we all do like put in tons of hours as founders, and like we spend crazy amounts of time, at crazy times, sacrificing a lot. And I mean, at the same time, we do enjoy, but if you rationally think about the investment that founders do in building and scaling and even like operating a business over the course of the years, if you give this away in its entirety, there's something that you lose. And this is a lot of people are not prepared for that.
Welcome back to the Legacy Advisors podcast, where we deep dive into what it really takes to build, scale, and sell a company, from founders who've done it and those guiding the way. I'm your co-host, Chris Jones. Alongside me is my co-host, Ed Button. Today's guest is someone I'm proud to call a friend, and someone whose journey through entrepreneurship and M&A is nothing short of a masterclass material. Joining us is Bastian Grimm, founder of PeakAce, Europe's largest independent performance marketing agency at the time of its acquisition by LBO France, one of Europe's leading private equity firms. Bastian is a globally respected voice in technical SEO and international performance marketing. In fact, he was named Search Personality of the Year at the European Search Awards in 2019. And if you know him, you know why. But this episode isn't just about SEO. It's about what it takes to scale a thriving agency, build an international team across 20 plus languages, and navigate the intense personal and professional roller coaster of selling your business. We're going to talk about how Bastian operationalized scale while staying lean, the power of financial and cultural readiness in M&A, what PE buyers are really looking for in agency roll-ups, and why exit planning is just as much emotional as it is strategic. So whether you're a founder deep in the trenches, an investor looking for what makes a deal work, or someone just beginning the journey, this episode is going to deliver. Let's dive in. Episode 9 of the Legacy Advisors podcast with Bastian Grimm. All right, guys, let's kick this off. Bastian, again, thanks for joining us. First question, let's start it at the beginning. What was the original vision for PeakAce?
So a bit of the backstory on, I guess, PeakAce is that actually I had a partner back when, a long time ago, 2012, if I recall correctly. I think for digital, that's quite that's quite a long time. So my partner at the time came from like the paid search side, and I originally come from the organic, so the SEO side, and kind of we met multiple times on different projects, and at some point we figured, well, why don't we just kind of put this together and at least make it easy on ourselves when it comes to like admin work and all these things that no one really enjoys doing. So there was no real vision at that point in time, I suppose. But what happens relatively quickly is obviously when you kind of start working together, like especially in the European landscape, what you see with agencies and their profiles is that they're pretty strong in their home market. So in our case, like agency was founded in Germany, so we would naturally deal with German-speaking clients, predominantly in Germany, but also Austria and Switzerland. But that's basically what most agencies in Europe do. They do cater to their home market and not beyond that. And we figured, like, if we want to differentiate ourselves, like, we would need to become a much more international, a much more global player relatively quickly, because otherwise it's just, everyone fishing for the same clientele, if you will. And so I think the starting point for PeakAce was that we understood the necessity that there are actually quite a lot of companies out there that require work to be done in more than one single language, but at the same time, we wanted to make their life as easy as possible by, I guess, reducing the complexity of having to deal with a ton of stakeholders, which brings in obviously management overhead, things get lost in communication, et cetera, et cetera. So yeah, I think you could say the initial vision when we started out was like, why can't we let's build a player that is serving, and at the time it was mainland Europe, basically, at the same quality for each and every market, no matter what, from one single location, and that was Berlin at the time.
We'll get into, the idea of mergers and acquisitions and what you're doing in your career now post the sale of PK's. But when you founded it and as it evolved, was selling it something that was a goal or something that you had in mind? Or at what point did you feel like, wow, I've built something that's created enough value that maybe I could sell it?
Yeah, I think it wasn't the beginning very early on, when we set up shop. Like, I think for me anyways, and I know also for my partner at the time, we were both like, we enjoy digital. We want to do like cool stuff. We want to deliver like great work. We want to deliver, and we have over the course of the years won tons of awards with it. Like, we want to like really do stuff that's being recognized, and that just actually drives value or ultimately bottom line for clients. I think we did quite well over the first like 3-4 years, up to like, I think like 2015. 2016 early on, where like we were like, okay, so this is going well. So like, where do we take it next, right? We literally doubled every year. I mean, obviously that's much easier in the beginning than it's getting at a later point in time. But I think all in all, we did quite well. And then I think one of the crucial milestones for us was we won a very, very at the time anyways for us, a very, very big account that was, and still is with the agency as of now, is Airbnb. And Airbnb at the time, they were doing like the growth marketing from Berlin. So we had a good relation. Originally, we only won the German-speaking regions. Apparently, we did something right. And that scaled relatively quickly over the course of half a year to not be just 1 or 2 languages. I think we scaled it to like 16 or 17 markets in like the course of half a year on the paid search side. And I think what naturally happens then is the other side, like when you win an account like an Airbnb, which was crazy hyped already back then, you kind of you get put on the radar for potential acquirers out there. But at the time, like we weren't there. Like, we have not given that any thought. Like, we were like, well, this is interesting, but like, do we even want to sell? Like, we had absolutely no idea. So I think first 3-4 years, there was no plan whatsoever. Then I think we reached this kind of crucial scale, and also, I guess, a bit of like the name and the brand reputation. And then I think that like kind of evolved from there.
Okay. Yeah. So as you were going through that, you won that larger account, Airbnb. And was that the time you realized that the company you were running was truly scale worthy to get to a place where you could scale through a few years of growth and then exit?
Yeah, I think that was like the kind of the aha moment, if you will, like a bit of the trigger point, because at the same time you would see an uptick in the European market as well for a lot of other agency acquisitions happening. This kind of was also like all between 16, 17, 18, like these 3 years, there was a lot. And at the time when we then sold, and I can share some general like how we did it, but like when we sold 51%, so we sold a majority share, but wanted to remain shareholders, and that was early 2019. But the big trigger, I think, was like also the uptick of activity in the market. And I think for us, what happened due to this positioning of kind of international capabilities, we were at the time, we were the largest independent European agency. I think that kind of naturally made us a relatively attractive acquisition. So I suppose that is kind of how it naturally evolved.
Yeah. So as you're going through all this, I mean, you said you started off with, you were doing your own thing on some different marketing stuff, and you had a friend doing some other things. In the beginning, you're obviously the CEO. In the middle, you're the CEO. In the end, you're the CEO. How did that change? How did that role change and morph into different things through the process, through the scale? I mean, I've been through it. I could talk about it, but I'd love to hear how you can interpret that.
Yeah, I think it's a very interesting one. I think I should maybe like the statement in the beginning that is maybe worth making is that I, never really wanted to run an agency in the first place, because I I really feel like I really feel like personally anyways, and some people might disagree, but personally I feel I'm not a great manager. I'm not necessarily great at a lot of like the people skills kind of a side. So it's interesting that you asked, because like I guess on the agency side, like there's some magic thresholds of employees where where agencies change quite significantly. It's like the first 20, then you kind of go to the 50, then you go like to the like 80, 90 mark, and then it's like 100-ish, and then it's 150, and so on and so forth. And like similarly, at the same time, your role or my role in that matter changed as well. So as I mentioned, I had a partner. We split like running the company in the very beginning. So it essentially was a CEO setup, which worked well for us. But I think what we did, I mean, obviously with like 20, you don't, but like a bit later, you realize, well, it would be good if we, for different teams and divisions, as I mentioned, we come from paid and we come from organic. We added paid social, we added data. You would need someone who kind of heads those teams, right? So you introduce department heads, and then at some point later, you might need someone who combines those things. And then at some point, I think that was the 100 people mark ish, straight before, like you introduce a management team. And I think that was for me the biggest change for me personally was as soon as we introduced this management team, which was a team of 4, or is a team of 4, I could essentially step away from a lot of the day-to-day, if you will, because essentially that team was running not only like, their responsible departments, but essentially they were running the day-to-day of the business, right? Because it's much more than just like the client-facing roles. So yeah, and then I think the other big shift for me that happened was with the transition from like becoming part of a larger group, if you will. Then you spend much more time on things at group level, or at least I started doing that. I mean, and I'm not only necessarily saying this in a negative way as to like, I don't know, reporting and whatnot. It actually gave me the opportunity to see the other side as well, because our parent company is part of a private equity, and they themselves started buying a whole lot of other agencies as well. So I got to see the other side as well. But yeah, that was I think personally for me, a big shift, like transitioning out of the PK's day-to-day-ish more to kind of like a group level function.
I have a follow-up on this, but it's sort of, because you answer a lot of what I was going to ask, but let's go back. At what point did you start to deploy strategies around operationalizing the business? And specifically what I mean is, and I know your backstory, we've been friends for a long time, so much like Ed, I could answer this for you, but I want you to answer it. At what point did the idea of scaling the growth of your agency, how did you operationalize that? Any tips for other founders that are out there? Yeah. See, one of the things that we just have to realize is that most entrepreneurs, or many entrepreneurs, never get to that $1 million mark, let alone 5 or 10 or 100 million. And I know that you've done that. So how did you think about growth? How did you operationalize it?
Yeah, you were right. I think it's a fundamental part, and it's very much like, for me anyways, and like I think for the business then as well, like we really went through the ins and outs of putting processes, templates, and structure into everything and anything that we do. So essentially almost like operational handbooks. As soon as you have a service, whatever that is, like you need a playbook basically. And that playbook is not only about like, if it's like an audit, how does that end product look like, but also much more around like, where does it start? Where does it end? Where does the kind of client relation sit within, like, what is the expectation? So we approach it always like from multiple angles. Like we try to do it like from a people's perspective. So like, what are the expectations based on seniority, etc., towards staff? Like that's one big thing, because only if you get that nailed, like your people, like, I mean, agency business is people business at the end of the day. Like only then they can grow with the business and they can grow with you. So clear expectations, career paths, career development, all of that. So we actually early on set up like a people and culture team that was solely responsible, depending on the different functions throughout the company, to, with the team leads, develop that individually, like per department or per team, if you will. So that's the one side. I think the other big side, and we're not even talking about like the client delivery yet, is I think we have a team that's called projects and processes. And essentially it's a cross-functional team that sits between or across, however you want to call it, everything. And they are basically the ones that do all the planning in cooperation with the teams. They're accountable for the fact that we do deliver, either the service or the hours. You get the idea. But like for everything and anything on an agency side, I think one of my biggest advices would be you need to standardize, you need to template. But at the same time, and that's a big challenge, and I think where a lot of people struggle is, you still need to leave the room for creativity. Otherwise, people will just be they feel like they're put in a box and they can't really do what they enjoy doing. So it's a bit of like this trade-off, but I think at the end of the day, you need structure to grow, because otherwise you have no idea about billable hours, you have no idea about margin and take rates and all the financial KPIs, etc., which are absolutely crucial to run a business. And specifically the agency business, I suppose.
One thing I want to mention before Ed dives us into M&A is, you're European, and here in the States, you have people like Mike King and Lily Ray and Joe Hall and Bruce Clay and Jim Boykin and a lot of personalities. One of the things I've admired about you, Bastian, is that you have always been, to me, one of those biggest personalities over in Europe, and through thought leadership and public speaking. And if I'm not mistaken, I think you won, was it Search Personality of the Year, or one of the big awards over in Europe for really your contributions. What I want you to just touch on real quick for our audience is just how you think personal brand and thought leadership plays a role in getting noticed, such that, at the end of the day, people are paying attention and watching you.
Yeah, I think it's especially in the agency world, and you're completely correct. And you mentioned, obviously, a lot of the people that I deeply admire and that I'm equally, I think, good friends with. So I think especially in the early stages of building and growing an agency, there might be a few exceptions, but I think in general, a lot of those live off personal brand / people that they have that are part of the agency. Can be the founder, can be just, someone that is just very well known for whatever reason. But I think if you look at it from a business perspective, that is what that network and that connections and the brand in itself, the personal brand, is what drives the initial revenue to a company, right? I think then, and that's maybe also going a bit back to Ed's point from earlier, this is similarly on the sales side. You hit this sweet spot at some point, not necessarily based on headcount, but in this case more maybe on turnover. But all of a sudden, your machine, and we noticed that as well. And I think was one of the mistakes that we made. We didn't notice quickly enough how big the machine has gotten. But you need to feed the machine, if that makes any sense. So all of a sudden, you need to have a vastly different sales approach. And I'm not saying one or the other, but on top of it, that can be outbound, that can be something entirely different, whatever works for you. But I suppose this is also a big piece of advice. It's great if you're doing well with and I mean no offense, with 10 or 20 or 50 people, but at some point you actually need to do proper sales, and that is much more than just living off someone's personal brand. Despite the fact, and this is quite clear, I agree, it certainly does help. I've spoken at hundreds of events, not only obviously for thought leadership, but also of course with the goal of generating revenue in the long run. It doesn't happen from one event to the other, but it is a game I think you play long run. Yeah.
Awesome.
Yeah. So as you're going through all this, obviously it's been a whirlwind of a career, growing this business, scaling it, and all that. When did the conversations about selling begin, and how did you prepare for that?
I think to start with the second part of the question, I think we weren't prepared. I think that is the reality. At least when we went into the first talk, let's be fair. I think so. Mini recap on what happened. Like before we ended up selling to like we now sold to a French a company called Heroics. That was end of 2018, early 2019. But before that, we actually had one handshake agreement. And also that fell through, or we made it fell through, and then another like chunk of conversations afterwards. But I think the interesting thing is obviously you learn from one to the other. The one that we weren't prepared for the first one ended up in us being, I think, quite okayish and quite happy with what we got offered. To say it simply. And then, like, due to the fact that that was a group agency, they were acquired at the same time. There was someone who had a veto blocking right with a transaction, so the thing fell through. Fair enough. Like, actually, they wanted to renegotiate the price, and we showed them the door. So that was that. But I think based on that, we learned a lot because we had been through the due diligence. We had been through a good chunk. I mean, we had done obviously like LOI. We had done the all that, like the stuff, and then it literally was kind of in the SPA process, and then they kind of wanted to change things and was like, well, this is not going to work for us. So there's the door. But I think all of a sudden you realize like how much time you've spent and all the mistakes that you made, in the last, I think it was 4 months for us in that case. And then you learn from it, and then you realize that maybe you should have done the LOI slightly different, or you should have maybe even reconsider like that the model that you originally thought was smart is maybe not so smart anymore. And maybe you would involve the lawyers only a bit later to save up some fees that you don't need straight away in the beginning. But obviously you only know that once you've made the mistake once, or maybe even twice. But yeah, I think the funny part of the story is that actually when we were to the second round of talks, we didn't want to sell anymore. We were just bored by it. It was like, no, not gonna happen. We don't have time for this anymore. Let's just grow, and then it's their problem if they don't buy us. That's it. And then literally, the French deal happened, and it was a really funny story because essentially, I got an email out of the blue. It was kind of almost like a cold email with like some details, and then my partner and I were sitting. It's like, well, we don't want to do the deal, so let's just send some ridiculous counter offer. So we penciled it. And then I sent a picture to the lawyers, like, look, this is what we're going to reply. And it was like, well, yeah, if you don't want to do the deal, then send it. I was like, okay, fine, done. So I sent it off, didn't think of it. And then like a week later, they came back and I was like, well, this actually sounds quite interesting. And this is how it went. So, I think at some point you just realize that you need to do what you think is best for you. And then you just see what happens. But a lot of people are actually scared to do that. And I can see why.
So I want to follow for that. Did you guys actively look for suitors, or did they come to you going through the process the first?
No, we were lucky. We didn't have to at the point. I think all of the conversations that we had were basically brought to us. So I mean, the first one was like someone reached out that I knew from a network, and they was like, well, we kind of want to do this exposition. Like, you fit the profile. It was actually a US company at the time. So it was, well, I think we want European footprint, which again goes back to our positioning, right? So we could serve everything in Europe. Like the US agencies, if they're not network agencies, they mainly work in the States. So for them, it would be a natural extension to kind of buy someone in Europe and then have clients that they can serve globally. So this is why they approached us. They approached us directly. And then the second, like, this fell through. And then kind of almost a repetition of that happened again through another contact. But then what we did, we thought we'd be smarter and not just rely on one single offer. And then we reached out as well to, I think, 3 others at the time to kind of get comparative, I guess, structure / offer / like the entire package. Even though we knew from the first one that what fell through, kind of what our minimum was, because it was relatively close together. It was like this happened, and then like I think 4 months later, because we were like, well, we had already done the due diligence, we have the data room, we don't want to update everything once or twice or 5 times more, so we tried to keep the timing relatively close together to not like to reuse what we could. But yeah, and with the French, as I said, it was essentially again them approaching us, which I guess was lucky, you could call it.
Yeah, definitely.
Always looking back, having hindsight is always a lot easier than when you're in the process. I know
Oh yeah,
I had
for sure.
I recently interviewed you for my book, and you had talked about, how emotional the process could be. But I have actually, what I'd love to hear from you is like, looking back now, and ironically, you're in a process now, if I'm not mistaken, where you're looking at deals for the PE company that bought you, right? So what insights, what lessons learned, what are you seeing that could help other agency owners who might be thinking a year out, maybe even as 6 months out or 2 years out? What's some feedback, some insights that you could give them now being on the other side of the transaction?
Yeah. So I think the big thing is that founders who go through the process the first time, like, they deal with a ton of unknowns in the entirety of the process. And this is basically as soon as someone eventually reaches out, or you kind of get connected to someone that might have an interest in your company. Because I think if you haven't given it any previous thought, then you're not ready on different levels. So you're not ready on, I guess, all the documents and everything else that they would require at some point through the process. You're likely not ready because you don't know what you're worth. You're likely not ready because eventually you haven't, prior to this, and you said like 6 months, I would say even maybe a year or two, like, you haven't put in the work for you to position yourself as someone or as a company that's actually an attractive target to acquire, which then would drive like valuation, etc. And then maybe at the same, like, even let's say you have done all of that, then I think the other side is, I mean, during the transaction is a big, painful thing, but then even after, it's just the same. I think this is what you're referring to also with what I said, kind of as in with your book. I think if you've worked, and we all do, like, put in tons of hours as founders, and like we spend crazy amounts of time at crazy times, sacrificing a lot. And I mean, at the same time, we do enjoy. But if you rationally think about the investment that founders do in building and scaling and even like operating a business over the course of the years, I think then all of a sudden, like, if you give this away in its entirety, there's something that you lose. And this is like, a lot of people are not prepared for that. Just out of experience, I've gone through the same thing myself, but also I think like, as you said, and I've been on the buying side. Now I'm more like on the advising side of others buying or selling. But like, you see this a lot, like, especially with first time founders / sellers. It's emotionally, it's a tough one. If you haven't had the chance to prepare for this, it's like, well, I want to sell in, let's say, 2 years time. I put in the work before, I do the positioning, I do the numbers, I do my accounts, I do my EBITDA, and I do all my adjustments and whatnot. Like, I think all of that, because essentially what's going to happen is when you reach that point, you'll likely face someone who has done like a good chunk of deals, and they know where to look at, and they know how to negotiate, and they know how to, worst case, down value you. And that is really it's not pretty. It's not pretty.
Is how early is too late to start prepping for a successful exit? Looking back, because it sounded like you and your co-founder, may have kind of been on again, off again, off again with how serious you were about the opportunity. But looking back on it, how early is too late to start prepping?
So if you do it really strategically, I think like a 2 years headway is great. I think a year is also good, but even with the year, there's some, if we talk about numbers specifically, and then maybe the change of accounting practice for you, because you kind of figured out that there is, EBITDA normalization that you might want to do. Then if you do that just 1 year, then there's a strong argument, if I would be on the buyer's side, so, well, you only changed that last year just to kind of clean up and do your numbers. If you've done that like 3 years in a row, then it's hard to argue that that's a change in accounting practice. So these types of things, it just really depends on how mature the business is and how, like, far down you are. But I think, if you have a 2 years window, great. If you have 1 year window, doable. Like, if you do it like with much shorter notice, then there's a high chance that you're not getting the maximum out of the deal. I think anyways. It's not doable, but it certainly makes it harder.
Yeah. Yeah. So your deal with LBO France, selling to PE-backed strategic, what really stood out about the transaction?
Well, I think for us it was like it's funny and it's not. Like when we took the final decision to sell, like we were at a size, I think 120, 130 people. Like we won a lot of accounts at the time. And then what happens naturally is you kind of start pitching for even larger businesses. And like that means we were competing with the network agencies due to the international setup. So we actually lost 2-3 major pitches not because we weren't good enough, but because we were too small to win like the mega big accounts because we didn't have a financial backing. So our decision to actually sell parts of it anyways to Heroics, and then Heroics is LBO France backed, is to have the financial vehicle in the background. But at the same time, what convinced us with them is like they're very entrepreneurial, they're very straightforward. Like I didn't want to have to deal with too much politics at the time and after the sale, because again, so we sold only 51. We stayed shareholders for different periods of time. My partner said for like 3-ish years, I did like 5. But basically, it was important for me during this period where I'm still like with the business, and I don't want to deal with too much like unnecessarily like political overhead, if that makes any sense. And that was a very convincing argument. That stood out. Like they really convinced us that they would be straightforward and pragmatic and like how they approach things. And that was also already true during negotiations and during SPA. We fast tracked like most of the due diligence because we had all of that pretty much pre-done. So they were very pragmatic about it. And I think this is very much how I like to operate. And so there was like this close match of like company DNA, if you will.
Okay. Yeah. So with them coming in as 51%, you said they really came to you, and then you did say that you did kind of check the market of some other options out there to look at structures, things like that. How were they different than those other offers and options you looked at?
Good question. Well, I think, I mean, for us at the time, like when you would normally sell, most of the M&A deals on the agency world would be like, you sell the entire thing, and you get an earn-out for whatever period that is. And the risk that I see, like for me personally, first and foremost, not about risk, but it's more about like, it wouldn't motivate me as much as to stay and remain actually shareholder. Versus if you sell the entire thing, you lose a lot of control, you lose a lot of power and rights as well. And then you would just work, quote unquote, against the target, right? And then if you reach the target, you might be lucky, and then you get a bonus and whatnot. So for us, it felt much more entrepreneurial, and they were just more accommodating about this kind of deal structure. And then there were some other terms in the SPA that we didn't get to, like if we talk to like the typical holding company versus them being like not one of the big 4, but like still big enough to do a transaction of that size. So I think that was the major kind of convincing argument for us, just like the pragmatism, the speed, the accommodation for what we felt would be a good structure. Obviously, they had some conditions, but I think, this is how it goes. But yeah, that worked really well for us, actually.
I'm gonna ask you another question, but before I get there, I want to just double click on this a little bit more. So I think for founders, they have this, they don't really have a good understanding of how the various options work for payout. You mentioned earnout. One of the things I like about the idea of selling to a PE is, to your point, you can continue to be entrepreneurial, and the upside is super significant. And I'm going to ask you to reflect on that, but I'm going to share a quick story. So when I sold my first company, it was to a publicly traded company called GSI Commerce. It was a deal where I got 25%, half stock, half cash over 4 years, right? And a 5-year earnout. Well, about a year into the transaction, the company was acquired by eBay, and all of the stock on that day went up 55%. And I share that story not to gloat, but to say strategically, it obviously, looking back, was a good idea. Tell me how that piece of it, that you were going to sell to this big PE company ultimately through a roll-up strategy, and then there will be another big exit for you at some point in the future, correct? Just reflect on that.
Yeah, I think this is exactly it, right? If you sell like 100% at the point in time, you know what you're getting. I mean, with the exception maybe you not necessarily know if you reach the agreed upon targets, and then you have like the kind of the bonus or the second component, for the lack of a better term. But I agree. Like it doesn't really matter if it's if it's a stock deal, a cash deal, a mixture of it. But yeah, for our holding company, it's the same thing. So they had done acquisitions and transactions prior. They had a change in majority shareholders prior, so they had done buyouts as well. So exactly that, what you've been describing. Once you start understanding how it works, and when you start flipping things multiple times, then obviously you have additional paydays. And for us, it was the same thing. So when we negotiated that, we said, well, there's a put call mechanism in place over like after the 3 years, and then later as well. And same as you, like when there would be a transaction happening from P to someone else, then we would roll up the rest as well. Like we would roll it into holding. The holding would, so like basically classic waterfall, right? And yeah, from an, I think, entrepreneurial standpoint, if you continue to put in the work, and if you're willing to continue to actually be part of the business rather than just sitting on the sidelines, I think the outcome can be much more exciting. And it was basically the same for me. Yeah.
Awesome.
Or for us, actually.
Yeah. Okay. Cool. So we already touched on on the fact that I interviewed you for my book, and you're in the book, which is really, really, I appreciate that. Yeah. Right. And but one of the things you talked about in that book was just how surprisingly emotional it is. After that CEO title is no longer associated with you. What does it feel like? And can you give some tips to other entrepreneurs for really how to deal with it? Maybe 2 or 3 tips on how to deal with that emotional roller coaster that you think is going to end the day you get the wire transfer, but in some respects, it's just beginning.
Yeah, it's a really good description of what it is actually. I think it has to do with the I guess the nature of this entire like kind of, or even with the life cycle of this entire thing, right? So you set out to do something, and then once you realize at some point that, well, yeah, of course, I mean, I pay myself like a decent salary, and like you can live well and all of that, but like ultimately, I think if you do your first like exit, then that oftentimes you would hope anyways is life-changing money for the person doing that, right? And I think what happened, or what happens, is you kind of work hard, you work hours, you work long. We had this. It takes on years and years. You're so much used to it, and then all of a sudden you hit this goal because you kind of, okay, cool. Like now this is sold. The cash hits the bank, and you're like, shit. But like, now what? And it's kind of a bit interesting, because for me it even happened when we did the first part of the transaction. And I think the main reason why I'm saying this is it's not necessarily about an exit per se. I think it's just like, it's more the event, like because you reached a goal. And I think this is also true for a lot of other things you do in life. Like if you chase this goal with all your like passion and work and whatnot over the course of a long time, and then you hit it, this is a great achievement, but you feel a bit like, okay, but I've done it now, so what's next? So I think, to your point, like for me, to ease this is like, I think you need to accept that first and foremost. It's just the nature of the beast, and it's completely normal, and it's completely fine, and no need to be ashamed, and just like let it sit and let it sink in for a bit. But at the same time, I think what helped me really, I'm still burning for digital. I still enjoy doing what I do. So for me, it was actually felt a bit of like this dip, and then you're like, okay, so, but you still need to find something that motivates you long term. So that would be my second tip. Like, you need I wouldn't say a replacement goal, but certainly find something that can do the same thing for another 10 years or whatever the time frame is. Just how I operate. I think I need something that excites me long term, kind of bigger picture, bigger vision, and then I kind of can do micro goals and get to this. But yeah, I think it's normal. It's just happening. What does help is to talk about it, especially with someone who went through it. I'm sure you guys see this as well when you kind of work with founders and companies, and it's the same like in this seat that I'm in. Like when I worked on the other side, like buying agencies, it was really easy for me to connect with the founders and those that were in the process of selling. It's like, look, I know how you feel. Like I've gone through the same thing, and if that comes from someone who has done it, I think this also sometimes just helps to like make them feel okay, if that makes any sense. Because so often for them, it's like if they sell an agency, like they want to know that it's in good hands. They want to know you don't fire all the staff. They want, these types of things. And once you've been on the other side, and at least if you're honest, obviously, but then I think you can ease some of that, and take some of that like mental pain away, if that makes any sense.
Yeah.
Great advice.
Yeah, definitely. I mean, as founders, a lot of times you'll feel like you're on an island. You really kind of, you go through this and you're doing it for your team, your company, whatever it might be. And a lot of times you'll feel isolated, like, I can't say a lot of times you don't want to say your strategic plans to any staff, whatever it is. So, that's one thing I said to Chris about us starting to do this has helped me as much as I hope it helps everybody else to talk about these things and talk about what founders and business owners go through. So one of the hardest parts that I have in my business, and we all speak the same language, is culture. How did you achieve that when there's 25 different languages you were managing in your business?
I think 22, 23 was the latest number that I remember, but yeah.
It's
you know what? It's a funny one, because at the same time, if you view it differently, like I can honestly say that I learned a lot. Like I learned a lot from having those many different cultures and nations and people and types of personalities kind of in the office. It just like it gave me a lot. And the other point I wanted to make as well, like with this whole you're on an island and like the kind of motivation bit, like I think what really was very, very like helpful for me in a way was like we set up like an employee stock options program prior to selling the company, and like we incentivized a good chunk of the like the top leadership and also later on the management team. So I could also argue, and I think it was true, because I got like, for those that like benefited after we did the deal, and some even benefited twice because we made it like a kind of an extension. Like I can honestly say that we made them some good amounts of money that for some was life-changing in a way as well. So it's not like being solely egoistic in a way. And obviously kind of that was a big thing for me, and it was a big thing for my family when you sell the business. But at the same time, you also like you give back indirectly. So like I was like, if you're in a position to do that, I think getting like some of the core team involved as well, like everyone running into one direction, like it helped us a lot to hit some of the numbers that we needed to make, and to kind of get some of the processes really running that we needed to kind of actually scale the business, because they all like had the hope anyways at that point, I guess, to participate in the long run. And that certainly was a big thing as well.
Yeah.
You know, what's interesting is that, you had talked about the wire coming in and sort of how it's somewhat, you didn't use the word anticlimactic, but it is, having been through it. But I don't want founders to be left with that. I think that at least in my case, there were a number of little bucket list items that I wanted to do that needed money to do. So I'll share one or two, and then maybe if you could share a few if you have any. because I had financial independence before I sold Pepper Jam as an example. But one of the things I wanted to do is I wanted to buy my mom a house, right? Which I did, and I was able to do it with cash. I wanted to buy a kind of like a retreat, like a family home that not only my immediate family could use, I wanted it to be on a lake, and I wanted my extended family to be able to use it. So I ended up buying a lake home. And again, I'm saying that just to say that, you could activate this money in ways that really are meaningful. Another thing I did was I joined a bunch of boards and got really involved in my community, sat on a board of trustees, sat on a local, a public broadcasting PBS station. So anything that maybe that you did once you had that first exit that maybe, and I know it's a little bit maybe much to be asking you to share this stuff, Bastian, but we appreciate it. And if maybe it could inspire an entrepreneur out there,
No, absolutely. I mean, absolutely. It's I think we are same for me. Actually, I did like 2 exits, smaller ones, but prior to PKs. So for me, it wasn't, it was still life-changing for the lack of a better term, but so I had kind of independence prior as well. So I think, but still, it's really funny because I could literally mirror some of the examples that you mentioned. So for me, it was like in a different order, but like when we did the first part of the transaction, I actually bought a piece of land and built a house for my parents to relocate. So kind of a similar story. My wife and I as well, like we do or did spend that time a lot of time on like charity stuff, different ways, shapes, and forms, predominantly on like shelters and like animal rescue type of stuff. So I live in the countryside of Germany. So the agency is in Berlin, but like I live up in the north. So yeah, there was a need and support need for that. So I think you're completely right. It's just like how do you and what do you do with it and how do you utilize it? Because at the end of the day, cash or money in any way, shape, or form is just a tool, right? And I think it's about how you utilize it in a way that it's well utilized. I think that's the major thing for me anyway. So and then you start doing obviously, not doing, but you're kind of, and I think this is the other thing, it buys you freedom in a way, so you can reallocate your time slightly differently. And I think this is the biggest gain, because then you can use it to do something else or spend more time with, I have 2 kids, with the kids, or whatever that is. So it's, I think these things is, I think, much more valuable than chasing the last from faster voice to euros. I guess for you guys it's dollars, but anyways, you get the idea.
Well, the interesting thing about it is that it is universal. We might call it the American dream.
Yeah.
We might call it the American dream over here, but the truth is it's the entrepreneurial dream. It's why
it is.
It's why people love Shark Tank and the shows that are over in Europe. So my final question for you, and then Ed gets the last question of the interview. And I just want to tell you, buddy, I admire you. I appreciate our friendship and really respect your time and making this for us. So thank you so much. So my final question is a bit going back to my first question, which is, what would you do differently if you had to sell Peak Ace all over again?
That is a really good question, actually. That is a really good question. I think we could, like in the process or for the process itself, we could have been much more efficient, much more structured. And I think one of the advices that I give now oftentimes to first-time sellers is to find help and advice kind of early on, just to really guide you through the entire process, to make not all the same mistakes that everyone else did, and some are more costly than others. So I think help early on, a sparring partner, just like someone to sense check what you're actually trying to do there, someone that can provide an honest opinion on if you really are ready, like not only numbers, but also, I guess, like from a positioning to like, what's going to happen during that, like how much distraction is it going to cost? And I think that for me anyways is probably the most important part. What do you want to do after? do you want to stay involved? Do you want to stay involved for a limited period of time? Or do you want out? I think, and this is very much dependent on someone's individual, I suppose, situation, as well as like their personal like life goals. And there's no right or wrong, but it's a driving factor to how you would generally structure a deal, first and foremost. So I think knowing the end makes it much easier to structure the entire process all the way through without, strange things happening in between, if that makes any sense. Because on the buyer side, and again, you guys know it, I've been there as well, like what you don't really like is surprises. Like if you're upfront with me and you tell me like I need to leave or I want to leave for whatever reason, you just tell me why, then I can absorb the information and then decide if that deal structure is something that I can offer you and I can accommodate, and what my plan is, how to make that work for you. But if you decide that like 5 minutes prior to, then that might be hugely problematic, because I might think that you haven't been honest with me or that there's other reasons that I don't know. And that is just dangerous. So I think, understanding the long-term, like what do you want to get out of it in any way, shape or form is super important. And I think this process to guide you through the options and the ways, having help helps.
Start with the end in mind. Go ahead, Ed.
Yeah. So speaking of the end here, last question from my point of view is around the whole deal, around the industry, kind of looking at it globally. Do you think your timing was correct in relative to the recent changes in the industry, primarily with AI, and now everybody talking about how the different service businesses of marketing, legal, and those things are going to be more commodity based because they can potentially be driven by an AI system?
This should really not sound arrogant in any way, shape or form, but I think we hit the nail with timing actually not once but twice. As crazy as that sounds, the multiples, the valuation multiples that were paid end of 2018, early 2019 were absolute insanity, And they are far higher than everything and anything that you get right now, with like very few exceptions for like crazy growth companies, but especially on the agency side, like these times are gone. So when we sold the first half, I think we had a perfect timing, and then it's so funny, mini story in between, and then I answer the second part of it. But like when we did like the original structure of the deal, both my co-founder and I said, like, because we had this conversation about like stay on periods, we said, well, in 2019 we were like, okay, we can kind of predict what happens in the next 3 years, which we could. And literally the year after, the whole AI craze, like first large language models, ChatGPT and whatnot, like popped up somewhere. And I kid you not, I think the timing now, so I sold my remaining shares with the end of last year. There's so much disruption in the industry. No one really knows where the agency models is going. I don't think it's going to go away, but there's massive like changes, billing models, pricing, margins are under pressure. There's layoffs. There's less budgets in the market, especially might be slightly different in the US, but like Europe is like under crazy pressure right now. And there's obviously a lot of consolidation plays happening there. So I think I'm quite happy, to be completely honest, to watch all of that a bit kind of unfold from the sidelines and then see what happens next. But yeah, I think timing plays a crucial part. Yeah, for sure.
Yeah, that's great. Glad to hear.
Awesome, man. Thank you so much, Bastian.
Gentlemen, my pleasure. Thank you.
Thank you.
That's a wrap on episode 9 of the Legacy Advisors podcast. Huge thanks to my friend and fellow G50 member, Bastian Grimm, for pulling back the curtain on what it really takes to build, scale, and sell a global performance marketing agency. From financial readiness and cultural fluency to navigating complex buy-side dynamics across Europe, Bastian Insights today were a masterclass in what founder-led excellence looks like. Whether you're deep in your own M&A prep or just starting to think about the journey, I hope this episode gave you the clarity and confidence to move one step closer to your own legacy. And speaking of transformation, in our next episode, Ed and I are turning the mic inward for a candid conversation we're calling Second Chances. We're sharing the real stories behind our own exits, what we got right, what we'd absolutely do differently, and the hard lessons we now pass on to the founders we advise every day. No filters, no script, just the raw truths we wish someone had told us sooner. If today's episode resonated with you, drop us a review, share it with a fellow founder, and head over to legacyadvisors.io for more resources to help on your own journey and your exit. Thanks for listening. We will see you for episode 10.